you're an Aussie sitting on the sidelines watching Americans make fortunes from companies like Nvidia and Microsoft, while your BHP shares go nowhere, then this video is for you. AI is bigger than the internet boom. It's happening right now, powering robotics in manufacturing, self-driving vehicles, and systems that outperform humans. It could add nearly 16 trillion to the global economy by 2030. I'm Josh, here from ETFadviser.com.au. I've been a financial advisor for over 20 years and I've seen so many investment themes come and go, but this is by far the biggest investment opportunity I've seen in my career so far. But the problem for Australian investors is that we've got virtually no pure AI plays on the ASX, and any of them are far too small and risky to invest in. So then if you're looking to invest in US companies like Nvidia and Palantir, you have to open international brokerage accounts, change the currency and stay up all night executing the trades. But there's an easy way for Aussie investors to access the AI boom, and it's right here on the ASX. In this video, I'm going to cover 4 things. Number 1, why this AI opportunity matters so much right now. Number 2, I'm going to show you the 4 specific Australian listed ETFs that give you direct access to the AI revolution. Number 3, why timing these investments matter. And number 4, why ETFs beat trying to pick individual AI stocks. Part 1, the AI opportunity. We now have AI agents that complete tasks autonomously, and AI systems that write code, make medical diagnosis, trade stocks, and optimize logistics in real time. This is already reshaping how businesses operate and how people work, and it's accelerating. But the problem for Australian investors is that if you want to invest directly in US listed AI stocks, you run the hurdles like currency exchange, withholding tax, foreign brokerage accounts, and the hassle of managing international holdings. Most investors just give up, but there is a simpler option: ASX listed AI ETFs. These ETFs let you access the global AI boom directly on the ASX. They buy the US and international AI stocks, handle currency conversion, wrap it all up into a single investment that trades like any other Australian share. You get exposure to companies like Nvidia, Palantir, Taiwan Semiconductor, and Microsoft, who are invested heavily into OpenAI, all without leaving the ASX. Part 2, the 4 key AI ETFs on the ASX. Now here are 4 ETFs to get AI exposure through the ASX, and each one gives you a different angle on this massive theme. First, there's a Global X Artificial Intelligence ETF. This is a pure play AI ETF. It's focused on companies generating revenue from AI products and services right now. Like Microsoft, which is deeply integrated with OpenAI and powers tools like Copilot through Azure. Nvidia, the undisputed leader in AI chips. And Palantir, which builds AI platforms for government and enterprise decision making. The ticker is GXAI. It has about 121 million invested in at the moment and has top holdings like Palantir, AMD, Nvidia, Apple, Alphabet, Microsoft. This one is important if you want exposure to OpenAI, the company behind ChatGPT, since Microsoft is OpenAI's largest backer. They have a multi-year, multi-billion-dollar partnership since 2019 that commercializes OpenAI models via Azure and Copilot. Owning GXAI gives you indirect exposure to the monetization via Microsoft's weight in the portfolio. Then there's a Global X Artificial Intelligence Infrastructure ETF. This targets the backbone of AI, power grids, data center equipment, thermal management, connectivity, and raw materials like copper and uranium that make scaling AI possible. The manager is Global X and the ticker code is AINF. There's only about $12 million invested at the moment, and it has top holdings like Arista Networks, GE Vernova, and Cameco. If you want exposure to the hidden layer powering AI like energy, data center build out, AINF is built specifically for that slice of the theme. Then we've got the Betashares Global Robotics and Artificial Intelligence ETF. This one focuses on the whole AI ecosystem, from robotics to automation and the companies building the physical infrastructure of the AI revolution. Some of their biggest holdings include ABB, which makes industrial robots, and Keyence, a leader in factory automation. Think industrial robots and autonomous vehicles. The stock code is RBTZ and has top investments like Nvidia, ABB, and Intuitive Surgical. The fund skews more to industrial and enabling tech than pure software. And finally, there's a Global X Global Robotics and Automation ETF. This focuses on companies using AI to power automation solutions. Things like Intuitive Surgical that makes surgical robots, or Zebra Technology that has AI-powered logistics. These are the end users implementing AI to transform their businesses. The stock code is ROBO. It has about $240 million invested in it at the moment. It has stocks like Celestica, Joby Aviation, Ambarella, and IPG Photonics. And we cover more cutting-edge opportunities in our Australian ETF weekly newsletter, see the link below, where we analyse the newest themes hitting the Aussie market and more importantly cover how to get into these opportunities at the right time. Part 3, because timing is extremely important. ETFs don't just go up and down randomly, they move in what I call a base and trend pattern. First they'll sit in a base, doing nothing, going sideways, boring as hell. Most investors get frustrated and sell during this phase. This is actually where the smart money is accumulating. Then something changes. The market all of a sudden recognises the opportunity and investors scramble over themselves to build a position. As the buyers overwhelm the sellers, the share prices rise, and in the case of an ETF, it breaks out of that base and starts trending higher. Asia, Betashares Asia Technology Tigers ETF, is a great example. It reached a new 4-year high on 14th of August, rising from $5.49, its low in October 2022, to $12.68, a gain of over 130% compared to the ASX, which grew just 30% over that time. CNEW, VanEck's China New Economy ETF, is another good example. It reached a new 9-month high on the 18th of August and is up over 56% in the last 12 months. This compares to the ASX, which only grew 16% in the same time. Both of these ETFs have featured as key ideas in our weekly newsletter since July. Click the link below to find out more. But right now, the AI theme is looking incredibly constructive. We've had the initial hype phase, we've had the correction, and now we're seeing real earnings growth from AI companies. The bases are forming, and it's looking like we could be on the verge of a major move. Part 4, why ETFs beat stock picking. AI is a massive theme, but it's also incredibly complex. You've got hardware companies, software companies, cloud providers, chip manufacturers, robotics companies. It's not just one sector, it's an entire ecosystem. And most of us don't have the time or expertise to research every single AI company and figure out which ones are going to be the winners. That's where ETFs come in. They give you diversified exposure to the entire theme. So even if you have 1 or 2 companies don't work out, you still are participating in the overall growth of the AI sector. Plus, these ETFs are managed by professionals who spend all day researching AI companies. They're doing the heavy lifting so you don't have to. But here's the bottom line. AI is the biggest investment theme of our generation. Internationally focused investors are making fortunes from this theme, and now Australian investors don't have to miss out. These 4 ETFs, GXAI, AINF, RBTZ, and Robo, give us direct access to the world's best AI companies right here on the ASX. And remember, it's not just about what to buy, it's about when to buy. If you want to stay ahead of these opportunities, check our weekly ETF newsletter at etfadviser.com.au. We're also offering a 28-day free trial. The AI revolution is happening with or without us. Don't let this investment opportunity pass you by. And I'll see you on the next video.